What's up, guys? Just checking if everything is working, but audio should be fine. 10 minutes till New York Open. Give me a second and then we start with a brief high time frame analysis. So, okay, let's go to the weekly. Bias for this week was bullish, as outlined in the past streams, in the last streams. Swept sell sides. Well, a weekly volume imbalance had only sell side delivery, so it's still inefficient and buy side. So I anticipated price when this week started below here. I anticipate price to trade up into this value, this weekly volume imbalance, and we may see a weekly close on top of this weekly volume imbalance. That's what I predicted, and we may, it depends on how we close today, but yeah, buys delivered. So let's drop into the daily chart. So if you grade the weekly volume imbalance, we closed yesterday at the upper quadrant, wicked through the weekly volume imbalance, but we were only able to trade up into upper quadrant, lower quadrant of this premium wick here. And today we took out yesterday's high, but we reversed at the midpoint of this premium wick. So it's also Friday, it's the last day of the week. I don't expect, or it's not likely to see a huge volatility influx today. We definitely had a bullish week, Monday low, Friday high. And what I expect is TGIF. Thank God it's Friday. So if we delete the annotations and draw a fib from low to high of the weekly candle, it's been mainly bullish, so we may see retracement down into 20, as much as 30 or 40% of the weekly range. And this would be if price came all the way up from down from here to the lower to the upper quadrant, that would be a 25% of a retracement from this current week's high. So yeah, maybe I can just come on. %, and we have 20%. I'll make this blue. Okay. So that's a range from the upper blue shaded line to the lower. That's where I anticipate where this weekly candle is probably going to close. If that's the case, which might happen, if that's the case, then this weekly volume imbalance wouldn't be efficiently delivered because there would be still a portion open where nobody, where no candlestick body is laid on top of it. So we might see next week to lay a bullish candle body on top of that of the upper half. So yeah, depends on how we close today, but yeah. So my bias for today is rather bearish. We also had a huge sell-off during London, so it could be London high of today and a New York continuation to the downside. Not saying I don't want to see, as I told you, I don't want to see a huge retracement to the downside. Just maybe as much as 40%, like this level right here, which is also the order block. So yeah, let's see. Maybe we can also go to the buy side, but a narrative is what I outlined just now. So yeah, you can see price. Okay, that's interesting. This level is okay. Price reversed from the okay. Weekly candle already retraced 30% into the weekly range. Okay, so thank God it's Friday. TGIF. We already retraced down into the weekly range. So yeah, kind of hard to tell. Oh, Romeo, what's up, bro? Okay, let's go back to the 1 hour chart. Bro, sessions. I just started like 4 minutes ago, so we are still analyzing high time frames. The past streams, like I started streaming on Monday. So I streamed on Monday, Tuesday, Wednesday, and Thursday. Stream has been, bro, really good. Predicted the market perfectly. But today seems like yeah, I don't know yet what the bias is for today's session. Still analyzing. So bro, I was in the gym today, bro, and I thought I haven't seen Romeo in a while. What is he doing, bro? What is he doing? This is actually my first stream on TikTok, so I'm also streaming on YouTube. Great, bro. Keep it up. Bro, of course. How are you doing, bro? Okay. Let's TGIF weekly levels. Okay. So I'm gonna hide this. Okay. I'm in the gym in the morning normally, but today a bit later. Okay. Nice to hear. Nice to hear you, bro. Yeah. Bro, how's your knee? Okay. So 50-minute chart. Mm, let's see. Opening range gap in 20 seconds. But better, bro. I'm still working on it. Promise. Okay. Yeah, bro. Keep working. Bro, I'm hustling. I know you are hustling too, so just keep up the work and we see each other, bro. Have fun. How's it going, Ank? Bro, everything's fine, bro. Very cool. Okay. Okay. Um, so today's pre-market session took out Asia low. Bro, kind of hard to tell right now, to be honest. Um, as I told you guys, thank God it's Friday. We already retraced down into 30%. We retraced 30%. So TJF kind of already formed. So I don't have any bias right now. Kind of neutral. Oh, JXM, how's it doing? How are you? How are you doing, bro? Okay. Yeah, bro. Price just blessing, just running higher. We also expect 10 a.m. news, if I remember correctly. Let's see. Mm, yeah. So 10 a.m. news. Oh. Mm-hmm. Okay. When we go to regular trading hours, this is the opening range gap. Okay. Let's make it, I don't know, like gray or some. Yeah, gray is good. Okay. Opening range gap. Okay. I don't think that's. Ah, we see. I don't know. Opening range gap high. Too low. Put the gradient levels on it. And we don't need this anymore. Okay. So this electronic trading hours. And now we are back to electronic trading hours. Okay, this is pre-market high, pre-market low. So this sell side. Here's buy side, London high. Now we swap buy side. Bro, I don't know what's happening. Look at this fucking candle, bro. Damn. Damn. What's up, guys? How you doing? Hmm. Okay. Let's see. So I definitely prefer higher prices because, as I told you, I want to see this weekly volume imbalance be efficiently delivered. So, in simple terms, I want this weekly candle to close on top of this whole range right here. Okay, so that would be perfect. So we prefer higher prices. We also have this daily fair value gap here, and we have these relatively equal highs. Okay, but we have to see how price is trading inside of this premium wick. Okay, so if we see price um keep up the strength, uh, so in last streams we had we had some really nice market structure and stuff, but today I don't know what price is already doing again. It's just taken off and going one way straight up. So premium wick, daily premium wick gradient, wick levels is enough. Okay, so we can hide this. Opening range gap, London high. Go back to regular trading hours. Okay. Hmm. Oops. Hmm. What's up, guys? Huh. We have relatively equal lows right here. Pre-market sell side. We already took London high. Let's go back to the 15-minute chart. So, bro, this market structure is honestly is pretty ugly. We have this inefficiency traded down into it, manipulated this low, so we traded down into yesterday's, no, the day before yesterday, Tuesday's new day opening gap. Wicked through, but bodies close at new day opening gap high, which caused, or this was the origin of this whole price lag to the upside. So we took out London. Gotta be honest, these lows are too obvious, but they are too far away now. So gotta look for a target that is realistic. So bro, gotta be honest, I don't know right now. My bias is neutral. We don't have clear buy side objectives or sell side objectives. We manipulate the downside and sell side and and buy side. So bro, I don't know what price is wanting to do now. I guess, as I told you in the beginning, TGIF, thank God it's Friday, could be the call for today. We had a weekly up closed candle. So, in simple terms, this week was very bullish. Traded down on Monday into daily fair value gap. Let me show you. Okay, so Monday traded down into weekly fair value gap or suspension block. Failed to trade down into midpoint, which I told you guys on Monday's stream. Very bullish. Bias is here, close on top of this weekly volume imbalance. So we want the price to reach up into the high of this weekly volume imbalance. Predicted it, price did it. So I said this was really bullish. I wanted to see higher prices. Tuesday, strong bullish candle. Wednesday, also closed bullish. And Thursday, yeah, we kind of lost the strength here. We closed at weekly volume imbalance upper quadrant. And we already took out Thursday's low. So for me, it kind of looks like we have a deeper retracement today. Yeah. So trade down into opening range gap. So we gotta wait for more information. We also have 10 a.m. news, so we just wait till 10 a.m. Bro, look how small these candles are. Then this candle is just, bro, 70 handles, 70 points, one candle. Bro, this volatility is too crazy. Crazy. Hmm. Hmm. Let's see. Bro, only this sell set is obvious. Here we had a low, manipulated lower, went higher, manipulated lower. So this is definitely made jagged, as ICT would call it. So this is, I don't know, we could may see a run below here, but that's not too, I don't know. Yeah, kind of hard to tell. Looks bullish for now. What can happen is if we have a weekly uploads candle, so if the entire week was bullish and TGIF, thank God it's Friday, the retracement that usually happens on Fridays, if it doesn't occur on Friday, we may see a deeper retracement on Monday. But yeah, kind of, I don't know. The thing is, today's high was here during London, and we already retraced down 30% into the weekly range. So the weekly range high is here, and 70% of the weekly range is about here. I'll show you guys. Where is it? TGIF. Here. 30% level of, or 70% level of the weekly range. So reverse from here. So TGIF kind of already delivered today. And then we had this huge rally to the upside. Yeah, so nothing I would be trading. Or take a trade on. So let's see. Gotta wait, guys. It's trading. You can don't force anything. Just see and look what the market provides you. Hmm. Bro, shout out to the two viewers. You're always there, man. Really appreciate you guys. So, turn off these levels. Oops. No. I just turned off price action, okay? I didn't know. Okay, let's see. Where is first percent fair value gap? First percent fair value gap is... That's too small, so I would guess. Nah, I wouldn't guess. I don't guess. That's the first percent fair value gap. So, still trading higher. Okay, let's see. New wick, no daily premium wick levels. Okay, so these are the daily premium wick levels from Wednesday, November 12th. Okay, so price was able to get up into the midpoint, accumulated, went down, wasn't able to close below the open, so that's a sign of strength. Now we are trading higher again, already taken out the buy side. So if we are bullish and price keeps going higher, you want to see price stay above the first percentage fair value gap. Okay, so first percentage fair value gap, there it is. So upper quadrant, let's see if price is able to close above. Damn. Okay. Regular trading hours, we left a portion of the opening range gap open, so this is also bullish, and we did not even came back down into the opening range gap. So as you can see, midpoint is around here, failed to trade down into the midpoint, so that's bullish. Price wasn't able to close below it, that's also bullish. We traded up and through the first percent fair value gap, also bullish. So you would want to see price now keep up the strength, and if it comes back down, retraces, it should find support inside of the first percent fair value gap and use it as an inverse fair value gap. Okay, so yes. Okay, we could see a retracement now. Or it could also be a huge market maker sell model. We have original consolidation. Sell side. Let's see. So 10 a.m. in 4 minutes. Now if price returns down into the first percent fair value gap, but doesn't use it as an inverse fair value gap, but trades through it and use it as an reclaimed fair value gap, bearish fair value, reclaimed and bearish fair value gap, then we might see another run lower, filling this gap, and maybe also taking out some sell side liquidity. Let's see. Let's see. Ach ja. Mm-hmm. Bro, I'm hungry. Just to let you know, guys, I'm also live on TikTok for the first time. So, I don't know. If you'd like to join the TikTok live stream, just look in my YouTube bio. I linked. I put the link up into the YouTube bio, so there you can find my TikTok account. So, yeah. Show some love, guys. Okay. So, price trading around daily premium for daily premium wick upper quadrant, repelled higher from this fair value gap. So, oh, okay. Look where the body's close, okay. Body's still below upper quadrant. Yeah, okay, as I told you guys, we might see a deeper retracement now. So definitely watch the first percent fair value gap. Yeah, maybe that's better. Wick, create that. Oops, no, that's too. Okay. Price accumulating in that Fabelli gap, was only able to trade down into this Fabelli gap, but we left the portion open, wasn't even able to trade down into the first percent Fabelli gap. Okay, so now also closed above weak upper quadrant and also above this consequent encroachment, so showing strength, definitely. What's up, guys? How you doing? How's the trading going? Okay, the daily fair value gap's kind of close. So if we go back to daily, also as outlined in the previous streams this week, these highs and this fair value gap could be the draw if we are able to close above this weekly volume imbalance. So let's go back to the 1 minute. So me personally, I don't like when markets in discovery. Okay, so we have no market structure. When we look to the left, there's no liquidity pool. We only have daily liquidity pools. So market is in discovery, and we see how far prices going higher. Seems like we will reach for the daily fair value gap. Okay, bro, that's huge. This price one is kinda huge, bro. What is this? I mean, come on. Okay. I mean, okay, we had relatively equal highs here. Hmm. Daily fair value gap above. If you're trading Forex or you're trading CFDs, then you don't have the option to switch between electronic trading hours and regular trading hours. So I'm showing right now regular trading hours. That's the reason why you see a gap here. But as I said, if you're trading CFDs or Forex, you don't have this gap. But you could also nevertheless use the levels. Just extends the 9:30 opening and yesterday's 4:14 p.m. close. Just extend these levels, okay? Even though you don't have a gap physically, you don't have the regular trading hours, but just extend the gaps at the opening level here 9:30 and closing price at 4:14 p.m. and use these levels, okay? This is still pertinent for you guys, even though you trade maybe Forex or CFD. So definitely don't just trust me, just test it, see it yourself. Okay, so oops. Yeah, bro. I don't like, as I told you guys, I don't like when prices in discovery because I feel like we are in a huge premium. You don't know how far price can go higher. Of course, we have a draw. We have the daily fair value gap above us, okay? But I feel like it could retrace on us every time and then go higher again, you know? So yeah, these are just not my market conditions that I would be willing to trade in. So I guess we're just tape reading for now. Hmm. Fair value gap, breakaway gap. So definitely bullish. Also breakaway gap. These are all signs. If you're long now and you're reading price, this should give you confidence on holding on to your trade, okay? So that's a draw, that's a target you could be aiming for. Mm, maybe I should just get comfortable in trading and trading when market is in discovery because yeah, you actually miss out on so many good trades. I mean, for example, here, the first entry opportunity, in my opinion, would have been here. But because when price was trading around here, I was expecting, or you could have been reasonably expecting retracement because we are trading and we're rejected from upper quadrant. So yeah, but as you can see, price accumulated more longs here, wasn't even able to trade down in first present fair value gap. And when price went higher and took out this low, that would have been the proof for me that price is more likely to go higher than reversing here. So that could have been a fair value gap that you could have answered on long on. So just do this. Yeah. Could do something like this. And you could take like partials along the way. Daily fair value gap in striking distance. Dow, S&P, NQ, all of the three indices going one way. Okay. It's tracing here. Bro, it's already dark outside. It's crazy. Okay. Again, price was not even able to close this fair value gap. Again, rather bullish. So now you don't want to see price close below this wick. That would indicate further strength. That was kinda having a deeper retracement now. Liquidity body stop, close. Sorry. Bodies. Okay, body close above. What's up, guys? How are you doing? Kind of interesting how you have more traffic on TikTok than on YouTube. Bro, the YouTube algorithm is shit. Okay. Like I told you, when price closes above this consequent encroachment, that's rather bullish. So now you want to see price close above this opening price. Okay, price only wick through it. so got rejected from this rejection block. S&P still moving higher, Dow kind of consolidating right now. Okay, you want price to definitely close above this close and this opening. That should give you confidence on holding onto your trade until your target, if you are maybe long now. Okay. Three seconds, a strong close, very strong close. So that's an order block here. So you want now price to be supported from that up close candle. So you always have to weigh out, okay? So we have a draw in striking distance, but we also traveled a lot to the buy side, okay? So the 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 closer we get towards our target, the more we are in a premium. The more we are in a premium, the more increases or the more likelier it is for price to have a deeper retracement. Of course, price can go there in a straight shot, but it's more likely that price goes higher, 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 retraces a little bit, higher, 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 have a deeper retracement, maybe take out a short-term low in order for all the people who went long to get stopped out, because I could almost assure you that if somebody went long here, he wouldn't let his stop loss below this low or right here. Okay, he would trail his stop loss maybe to the last low, like here. So smart money wants to take out these trail stop losses and then go to its target. Yeah, 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 yeah. So if you are trading in a market that is in this recovery, like right now, you should definitely take partials along the way. So, for example, if you entered right here, let's put back on the premium wick levels. There you go. Okay, so that's the high of the premium wick. That would have been kind of too, yeah. I would require a target, a first partial to be a little bit higher. So maybe I would just turn off these levels, go back to the daily, and I would just, since we were able to trade through this premium wick, I would just monitor this premium wick and have it on my chart. Go back to the 1 minute. So that definitely should have been a target or a first partial opportunity for you guys. First partial, leave a runner on to the buy side if you want. Price now retraces at the upper quadrant, retrace down into the upper quadrant, and now find support. wick midpoint, body's close below. So to show further strength, you would want this candle to be consumed. So you would want price to close above this wick, at least above the upper quadrant at the midpoint, but in best case scenario, close above this high of the wick. And also get through this potential bearish order block midpoint. Okay, price wasn't able to trade down into this volume imbalance and just retrace into this volume imbalance, so this shows further strength. Bodies also maybe close now above this high. No, okay. Bro, I'm tired. Yeah, boring session. Bro, Monday, Tuesday was beautiful. Wednesday was horrible. Bro, we had just an entire session full of consolidation. Bro, just pure consolidation. Bro, just going sideways for a half an hour, 1.5 hours. So yeah, Thursday in the beginning was kind of similar to Wednesday, but then in the end we were able to map out some good trades, some good shorts. Timo was also able to gain some profits, and yeah, Okay, so order block, midpoint, respected. Now we approach 10:30, so when price was running higher for the first hour of trading, so when price was running higher from 9:30 to 10:30, if a reversal is likely, or if there would be a reason to expect a reversal, it would form most of the times after 10:30. Okay, so now it's 10:28. I don't know. I don't want to pick the top in a bullish market. What do I mean by that? So we've been trading to the buys to the upside for about an hour now. Okay, so I don't want to be the one who says, okay, now the first time we have a deeper retracement, that's going to be the top, and we trade no more higher. Okay, been there, done that. Okay, so many times got stopped out. I went short. Like I would have gone I would have gone short, or I would go short when price would trace high into this fair value gap, which in this scenario may pan out, and we could have had a profitable trade. But most of the times when you go short now, you are more likely than not get stopped out, because this is more likely now to be a deeper retracement than a complete reversal. Okay, so you don't want to be the one who is picking the top in a bullish market. Okay, you want the reversal to confirm itself. How do you know it confirms itself? Okay, we had the first retracement, went up, were rejected off of the order block mean threshold. Okay, so when you see price now maybe move a little bit lower, go up again, and maybe would just trade back up in the lower half of this fair value gap, and then repels lower, and then there would be maybe an order block fair value gap entry. That would be maybe something I would consider, but I would just rather sit still and do nothing, because I don't want to risk anything on in a bullish market, and there's no reason to frame a market maker sell model for now. So yeah, opening range gap portion, unfilled portion is a reasonable draw, but yeah, nothing's indicating lower prices yet. So just wait and see what price gives you in terms of market structure and price action. So crazy. 25 points. If you profit 25 points a day, 5 times a day, 20 times a week, 20 times a week, 20 times a month, you have $1,000 when you trade with one contract. And this is literally all it takes, okay? So you don't need more than this. And look, 25 points is all you need. And look at this entire price run, bro. This entire price run was more than like about 200 points, okay? So look, that's a reason. I told you guys. I used to go short in here, okay? But as you can see, I would have been stopped out. So you want the reversal to prove itself, guys. Bro, what's happening? Hmm. 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 So we retrace down into this propulsion block. What is a propulsion block? A propulsion block is an order block. Why is this an order block? Because we have premium wick, daily premium wick, midpoint. We have a down close candle on top of this premium wick midpoint. So that's a high probability order block. Price traded through its open higher, then price traded down into the order block. And as long price trades down into the upper half, as far as down as to the midpoint, that's a propulsion block, okay? If you have an order block inside of an order block, that one's a propulsion block. And if price trades down into a propulsion block, oftentimes, more often than not, you see a beautiful price run to the upside. And yeah, we had some nice, beautiful reaction to the upside, but price is now still being rejected off of this order block midpoint. Okay, so no viewers. Man, streaming is just, I'm just holding myself accountable. That's all. That's all I need. So I don't know, yesterday or day before yesterday, I saw a brief short form video where I show Speed was talking about the time where he when he was starting to stream, and he said he had one viewer for like, I don't know, like the first 1 2 3 weeks. he only had like 1 to 2 or 3 or 4 viewers, but the first viewer was enough for him to just keep going. And I guess, bro, I just need one. Somebody out there, I'm trying to help, trying to teach you guys, or maybe just help you get better at reading price action. So yeah. So kind of moving sideways right now. Okay, let's see. Let's go to MESZ 2025. This is S&P futures. Okay, so S&P was able to make a higher high while NQ didn't. So NQ apparently is the weaker one compared to NQ is the weak one compared to S&P. But if you now go to MYM, which is Dow, and if you trade futures, Nasdaq futures or S&P, you always want to have an overview and an eye on all of these three averages. Okay, so Nasdaq, Dow was kind of looking like Nasdaq, but even more weaker. So yeah. So I don't actually work too much with S&T because ICT said that ICT is a nice confluence, but it's nothing he would base or frame a trade around. So on the internet, I always see traders who just base all of their narrative and all of their like supporting confluences on SMT, and there's always SMT, always, and you cannot just say, oh, there's SMT, so I take a trade, bro. SMT is just the cherry on top, you know, but it's not the I don't know, the something you should frame your trade around. Okay. Okay, so 10:40 now, so 10 a.m. open at 10:30. Open was here, traded up, turtle soup, now trading lower instead of this auto block. I mean, I don't know. There's actually let's see. I mean, I'm looking for a daily wick gradient level that this price originated from, but bro, this point it's just random. I haven't found out why price actually reversed here. So if you look at the daily, we have this week, price just reversed between these levels. We had this week, bro, just price traded through its high. So we have this week, that's a huge week, and we also traded through the low, and bro, it's lower quadrant here or something. So also, yeah, maybe if we take this fair value gap, nope. Is there a volume imbalance? No. Okay, so I rarely see price keying off of like a random level. So I don't know if I say, okay, I want to see why price return here. I definitely will find an answer why price was retracing or reversing here. So for example, why did price reverse here? Okay, we have opening range, so it reversed inside of the opening range. That's enough. But you could also say, okay, but bro, it was also reversing not at the midpoint or upper quadrant, but it also reversed like in between. So there's not like a specific level that it traded down into. Okay, what is with the London Open at the London first presented fair value gap from map out London's first presented fair value gap from I think Thursday. No, London's first presented fair value gap. Yeah, Thursday's London's first presented fair value gap 2:05 a.m. That's exactly where price reversed here. Okay, so there's the reason why price reversed here. But bro, I don't have any new day opening gap, no new week opening gap, no first presented fair value gap, no opening range gap level, no premium daily wick quadrant level or whatever here. So this is kind of hard to trust. But let's see, okay. So it's 10:45, macros approaching. We have this fair value gap right here. That you want to be grading. That's an high probability order block. Price traded up into the order block twice. That could have been a short opportunity here, but it's not in a macro time window. And bro, if I take a trade now, it should be like macro time window, high probability PD array, like high probability fair value gap or high probability auto block, plus also we have a good draw on liquidity, low here, opening range gap, low, unfilled portion. So yeah, price just retraced down into this fair value gap, but closed above the midpoint. So let's see. Let's do dash lines. Yep. Okay. Let's see. Do we get our 25 handles? Or maybe even more? Auto block. $10.48. So there's no actual price, a reason why price reversed here. Let's see, maybe there's, I don't know, is there a new week opening up? New day opening up? No. Also no new week opening up. Okay. Prices respecting the auto block. That's also a breaker. So actually you could go short from here. Macro time window. Approaching. Wow. No retracement higher. Bro, I was waiting patiently for the macro. Now macro started here and just bam. Went lower. Okay. Do I get an entry opportunity? Bro, oh. Let's see. Nice. Bro, no retreat. Bro, I was waiting for a retracement down up into this propulsion block here. Bro, come on. The reason why I didn't enter here is because it was 10, 48, 49, 50, bro. Bro, it's always the same. Like in the past few weeks. And this is what I mean. I wanted to see price, or I want to see the high confirm itself. So I didn't take this short. turtle soup, low, breaker, high probability auto block, high probability fair value gap. So that's definitely a high probability auto block. But time was not aligning. Bro. Bro, I fucking predicted this move. I waited for the macro time window 10:50 to 11:10. I just wanted the fucking retracement up into this auto block. That's an auto block, so all of this is also an auto block. Auto block inside of an auto block is a propulsion block. So, bro, no retracement. Nothing. 10:50 started here. Bro, I just need a 1 wick. 1 wick higher. Come on. First percent favori. That would have been my draw on liquidity. That would be, bro, low hanging fruit, objective. Maybe these relatively equal lows, or this first percent fair value gap. Obvious draw on liquidities. Obvious draw on liquidity. Obvious target, low hanging fruit. Beautiful run lower. Damn it. Bro, this is unfortunate. So, this is also a suspension block. So, no tracements up into a suspension block. And, bro, I don't want to go short as soon as price, like, for example, trades outside of this fair value gap or below its fair value gap, because I always want to enter a trade. For example, when I want to go short, I only enter a short opportunity, like a short, when price is trading to the upside. Okay, so we didn't have a retracement into fair value gap or order block, so no opportunity for me, at least not for my model or not for my entry mechanism, to enter a short opportunity, a short. So no entry opportunity presented itself here, except for this entry at this order block. But as I told you guys, time was not aligning here. 10:48, 10:49, 10:50 here. Same, bro. Ich rufe dich gleich zurück. Ciao. Damn. That's crazy. Crazy, crazy, crazy. Okay. Market maker sell model. Low risk sell. First stage distribution. Second stage redistribution. That's ICT's favorite model. He said, if he would have if he was only able to trade like one model, he said he would trade only the um, second stage redistribution in a market maker sell model, or the second stage reaccumulation in a market maker buy model. Why? Because he taught us that the second stage redistribution or second stage accumulation, these price runs are the most one-sided or one-directional, no retracement, just like boom into target, and there it is. There it fucking is. Oh, okay, maybe if I just predicted that. So I wasn't aware of. So in the beginning, I said that could be a potential market maker sell model. Okay, I was just having trust issues with this high because it didn't originate like from a premium daily wake up quadrant or whatever, just like kind of nowhere, no man's land. It kind of reversed at a random price point, so at least I don't know actually what key level is around here. Didn't find it yet, but so I wasn't aware of the fact that we already had like low risk sell, first stage distribution. So maybe if I thought, okay, that is definitely a market maker sell model, where would be the first stage distribution and second stage redistribution? Then maybe I would have identified this one as lowest sell, first stage distribution. Why is this first stage distribution? Fair value gap, retracement up into fair value gap. Second stage distribution, redistribution, order block, and there she goes. There she goes. Yeah. Maybe if we mark out discount to premium, so that's the midpoint of the range. So is it? Yeah. Okay, why not enter here? That could be short. Come on, bro. Executions. Where you at? Bro, I just risk too much, so trade my stop loss. I only risk like whatever. Okay, that's okay. So now you want price to close below the first percent fair value gap. I want to see price get. I would like to see price get heavy in here. And if it takes out my stop loss, it's more likely to retrace deeper. So I'm fine with this stop loss. But bro, I don't like how price is now. Maybe I buy another one. I buy one bag. Because yeah, let's see. Bro, I don't like these lines. They're just irritating me. I want price to close below here, and it's still inside of the first percent fair value gap. Bro, too many lines in here. Bro, I just need to turn off my positions. I can read price action. That's better. Okay. Now I want to see speed to the downside. So in case I just... Okay, so guys, we are now in a short. I just turned off the... Okay, no. Bro, this candle has to close below the first percent fair value gap. If it doesn't close below the first percent fair value gap, I buy one back. Position rechts. So I would like to get heavy in here. No reason to trade back up. Bro, it doesn't want to close below. Okay. It's not looking too bearish. I told you I want this to close below its first percent fair value gap. It didn't, so it's more likely to stop me out now. I think I buy one back. Yeah. Buy one, so we only showed one. Bro, lost 4 trades in a row. I guess if this trade hits TP, We could be up nice. Beautiful. Now, this is what I wanted to see. So we want price to trade and close below this fair value gap. So my stop loss is safe. If it trades, if we are and continue further bearishness, my stop loss safe. So just commit to the trade. Just for my own safety. This is not any financial advice, so this is just my opinion. This is paper trading, okay, guys? So we have immediate rebalance here, traded up into first minute fair value gap again. Okay, if price closes below this low, I trade my stop loss to break even to cover costs and commissions. So there you go. If it closes above, I trade my stop loss to break even. So that's a trade. Shorted here, stop loss here. Oops. No, what did I do? No, 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 no. Okay. Bro, come on. Okay, price didn't close strong. Bro. Ah, fuck it. Look at this. This is not too so price should consume all of this wick, this or the next candle. Okay, so maybe I just reduce the risk by 50%. And we just give it out to the trades, watch the midpoint. Price should have no difficulties to trade through the midpoint and close below this fair value gap. So bro is hesitating too much. Okay, do we close the trade in here? Do we trail stop loss to break even? Okay, we are up 40 bucks. So I just trail my stop loss to break even and commit to the trade. Yeah. Maybe it would have been smarter to just take profits. Yeah, obviously I only have one micro short, so want to see heavy close now. Yeah, that's what we want to see. Beautiful. Close below. Yes, sir. There it is. Yes, sir. Close below midpoint. That's the heaviness I'm talking about, bro. Okay. Even better if price close below this week's low. Yes. Okay. Now we should see a drop. See speed. Fucking speed. Even close below. There you go. Come on. Just a little bit more. A little bit. Come on. Come to daddy. Okay. TP is at midpoint. Stop loss trail here. Stop loss above this point. After this trade, I show you guys the executions. Okay. So, oh, we are weekly volume imbalance highs here. So we want to close below. We want to close below here. Okay, close below here. Here's the weekly high. Weekly volume imbalance high. Yes, sir. Close strong. Close strong. There you go. Bro, close strong. Come on. Okay, we closed at yesterday's opening range gap, upper quadrant. Yes, sir, that's what we want to see. Perfect. Price now retraces. Fair value gap. Okay, I guess I just put my TP at weekly here. Don't want to be greedy. Here's weekly volume imbalance high. Am I greedy now? Okay, filled. I'll show you the executions. Of course, price now goes lower. But that's fine, I'm content. Executions are here. Okay, perfect. So shorted 2 contracts, bought one back at break even because was too much risk for me personally. Then we put our TP at weekly volume imbalance high. Okay, so we are now up $360, made $90. We made back our 4 losses. And yes, sir. There you go. Also, obviously, could have hold on to the trade longer, but I didn't want to be greedy, and that's actually low-hanging fruit objective here, where I exited the trade. Okay, so as you can see, price is just kind of, I don't know, hesitating to go lower. So that was a trade. Beautiful. 3-1, 3.2 to 1. Beautiful, 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 beautiful. Okay, guys. I would say that's it for today. I hope you guys enjoyed it. Well done. Thank you, bro. So I guess I see you guys tomorrow. Oh, tomorrow. Yeah, I see you guys on Saturday. No, I see you guys next week, Monday, live stream on YouTube, TikTok. Check out LB Trading on TikTok, YouTube, same. So yeah, link also in the YouTube bio, or so TikTok link to my TikTok channel is in the YouTube bio. Link to my YouTube channel is in the TikTok bio. Depends on where you're watching right now. So that's the reason why I fucking exited here, because just wicking lower, have a deeper retracement. I wouldn't want to endure it. So don't be greedy. Be content. Low hanging fruit. Made around $100. That's it for today, guys. I hope you enjoyed it. Please hit the like button or thumbs up. It would definitely encourage me and motivate me to keep going. So thank you guys for listening, and I would say I see you on next Monday. Good luck, good trading, and have a nice weekend, guys.